Can you explain how FGen defines environmental infrastructure and why this is a compelling investment theme today?
Yeah, absolutely. So we really see environmental infrastructure as being the systems that enable decarbonisation and sustainable resource management. So that might be projects or asset-backed businesses that support more environmentally friendly approaches to economic activity, that support the transition to a low carbon economy, or that mitigate the effects of climate change. And being infrastructure assets, these typically come with certain characteristics that might be long-term predictable cash flows with inflation linkage, or stable economic and regulatory frameworks, or that come with proven operational track record, demonstrable track record. And really we see this subset of infrastructure as being one of the most exciting and largest, most significant investment opportunities of our generation.
How do you balance risk and return across your three pillars: renewable generation, other energy infrastructure, and sustainable resource management?
So as you say, we've got these three pillars, and really what we see ourselves as being a diversified portfolio across them. So what we have tried to do is layer up combinations of assets that are complementary to one another. So in its most basic form, that might be putting wind and solar assets together. I think we can all guess that when the wind's blowing, it might be more likely that the sun's not shining, and vice versa. So we have a natural hedge across our assets. That means we're much less exposed to, in that example, individual risk factors like weather patterns. And by putting more and more of these assets together, what we can do is introduce more resilient asset characteristics and better risk-adjusted returns overall for the portfolio.
What's the geographic split of assets in the portfolio, and how does location affect performance and risk?
So at the moment, about 90% of the portfolio is in the UK, and I think it's fair to say that the majority of the portfolio will always be in the UK. That's where we understand our assets, and more importantly, our investors understand those assets. And it's easy for us to communicate to new investors and for them to get their heads around it. And that's a really important factor for bringing on new investment. We do, however, have vast experience outside of the UK. So FGen's investment manager, Foresight Group, has got 14 billion of assets under management, of which a large proportion of that is outside the UK. So we can lean on the experiences learned elsewhere within the manager. So we do have assets at the moment in Europe, and we'll continue to evaluate on a case-by-case basis where to deploy capital. But we certainly don't see any shortage of pipeline in the UK. So I think that's probably where we'll stay with the focus for FGen.
Renewable generation makes up 73% of the portfolio. Do you expect this weighting to change over time?
Yeah, so I think the 73% will change over time. I think it's natural that as more opportunities emerge, not just within renewable energy generation, which will no doubt continue to need significant investment to deliver on the net zero targets that we have within this country. But we'll see other opportunities emerging within grid infrastructure or within sustainable resource management. So we have a portfolio that has allocations to each of those. And I think as we seek to recycle capital away from some of the lower returning sectors and in towards other sectors as they mature and become attractive, the percentages will naturally fluctuate. Although I think it's fair to say that renewable energy generation will always have a significant role to play because it is such a strong income provider for our portfolio.